Back in the U.S., it's widely predicted the Federal Reserve will end its bond buying program Fed officials use to stimulate the American economy. Economists expect the Fed will call for the end of the program at tomorrow's FOMC meeting. Todd Colvin, a Fed watcher and independent trader, joins us now. Todd, is it a sure thing the Fed is ready to make this move?
Yes, it is. They will do that for sure. They'll end the purchasing program that's been in place for the last year or so, and they will hold those assets. So not necessarily going to flush the market with all this long-term, long-duration paper, but what they will do is hold it, and that in itself will create or continue to create demand and scarcity for long-dated, high-quality paper. So even though they're not purchasing anymore, the Treasury market should react in a way that is probably similar to the way it's acted over the last year or so, and that is to keep rates steady to lower, not like where we saw that huge spike lower in rates on growth concerns as well as Ebola, as well as the Middle East. So I think that was a separate issue, but going forward, I think, yes, we'll see continue more of the same, rates to hold steady. I think right now at 2.25, 10-year yields are slightly lower than the Fed wants them to be, but right now that we're starting to see that's a little bit out of their control, which is something they're not used to.
Do you believe QE3 was productive?
I think what the QE3 did was it bought the Fed time. If we look at what the first QEs did, rates actually went higher when they initiated their QE programs, and then when they withdrew them, they went lower, which seems kind of backwards. But right now, the Fed is holding on to a lot of paper. There's a lot of demand for that paper because and what they're trying to do is create demand in the corporate world as well as in the stock world, and that's exactly what they're doing. So I think with keeping rates low, keeping investment high in other areas in corporate America, that's what they want, and they also want to keep volatility in the financial marketplace low, and that's also what they've done. And if you look at what happened with that spike, the Fed lost control, and as Adam Smith said, the invisible hand kind of got its way, and we were waiting for that moment since the Fed took its rates to zero in December of 2008, and it hasn't happened until now. And now we see that the Fed can lose control, but ultimately their QE programs have done, I think, what they expected them to do.
Thanks, Todd, for your thoughts on the Fed.
Thank you.